What's up, Rainmaker family? We got an epic guest for you on the show today. We talk a lot about making money, multiplying money, but today we're talking about protecting your money. What if we could build a wall around your wealth? What if we could talk about ways to actually guarantee a financial legacy for your family? We're getting into that today and much more because it's not about what you make, it's about what you keep. So welcome to the show, Ramie Khalil.
What's going on, guys? I'm super excited to be here. How are you guys doing?
Man, we're doing good. And
Yes.
Ramie, you guys, he's a great friend, but we met through the entrepreneurial world. And honestly, Ramie, you opened our eyes to a lot of stuff when it comes to wealth preservation, right? Because we loved the side hustle. We loved building the businesses. But honestly, I think when we met you, we were paying way too much in taxes. We were not protecting our money. We were not building walls around things. And you've really helped us mature. I feel like every time I get around you, you're pulling out a whiteboard and mapping something out. And so that's what we want to do today. We recently had Ramie come into our community and do a full training on this, but we want to expand that topic a little bit more and really talk about this thing that I feel like people use in a lot of different ways, but it's also kind of controversial, right? Like if people have a lot of opinions, because as soon as I say this word, you might already start thinking some things. So I just want you to like hold on for this conversation, have your hands open, because honestly, we thought some things too when we came in. And the topic today is life insurance. Life insurance, okay? And I remember when we met Ramie, we were kind of like, came from the Dave Ramsey world, right? Dave Ramsey does like life insurance, but he's like term insurance, right? Buy term insurance. And we're going to define all these things if you're totally new to the life insurance thing. Is that's what we had. We had kind of like a low term policy. There's nothing wrong with that. But when we met Ramie, we started to learn some concepts, some ways that, high level entrepreneurs, successful families, even banks, institutions use life insurance as an amazing vehicle, not just to protect, but to create savings. And this really changed the game for us. It really opened our eyes. So I want to kind of just start with the basics, Ramie. Like, talk to us about insurance, okay? Life insurance specifically, and some of the different types out there, life insurance.
Yeah, well, it is interesting as an investment advisor, as a financial advisor, of all the things I talk about, investing in the market, investing in real estate, creating a financial plan, building wealth. Whenever you say the word life insurance, right, it is interesting how quickly the environment can change depending on who you're talking to. And it's funny that that is the case because if you talk about car insurance, people get it. They know, hey, if I'm driving, there's a risk of accidents and I need to have some insurance so that I'm not in a scenario where I could actually be creating a major loss for someone. God forbid, someone loses their life, but more so, if there's an accident, I have to come out of pocket to replace the value of something lost in the vehicle, in my car. You talk about homeowners insurance, people get it. Any other insurance, guys, people kind of get this concept. But with life insurance, it is interesting the different emotions that can actually trigger. Part of that is because we're human beings. No one really wants to think about death, right? And the minute you think about life insurance, it's natural that that's what you think about. It's like, oh, okay, this is something that I would do if I pass away so that, my family has some income. But really, what is life insurance? Life insurance is simply the transfer of risk away from one entity or individual to another. What you are literally doing is you're saying, hey, I could either self-insure this risk that one day I'm going to die. And if I have a young family, if I'm young, if I'm just starting off in life, or if I'm a business owner, an entrepreneur, and I'm building my wealth and building my business, generally in that season, in that phase, right, there is more for others around us to lose if, God forbid, we weren't here from an economic standpoint, from a financial standpoint. So for someone who has dependents or who just has that as a goal that they do not want to have a burden left behind, how do you transfer that risk? Well, either you just self-insure, you just go, hey, I'm just going to try to make a lot of money, buy assets, or you can transfer the risk away through life insurance. And that is an actual product where a multi-billion, trillion-dollar industry says, we will absorb this risk and take that risk away from you. And so that is what it is. It's the art of transferring the risk of financial loss away from you and your family. And that's what it's designed to do. And that's what it has done for over 100 years.
Yeah. Ramie, I think the thing that changed the game for me, because I always thought like when we did term insurance, I was like, okay, I know this is like, we should have this. And like
Mhm.
people are saying we should have this. And I totally get that. Like, you know, in those, I mean, in the early years of marriage, we were not making much money. But even that, I was like, hey, if I go, I want Chelsey to be hooked up and I want her to be taken care of for a season. But I always felt like I was flushing money kind of down the drain a little bit. And I
Mhm.
think sometimes people can feel that way when they're, you know, renting a house or they're, you know, doing like, you know, insurance, right? Like some sort of insurance. It's like, oh, I'm just like putting money in this thing. It's just like disappearing. It's just going
Mhm.
away. But when we met you, that's really when we started learning about the concept of whole life insurance and the thing called cash value. And that's where I think my light bulb started turning, where I was like, whoa, wait, you're telling me we could get this benefit that like,
Mhm.
one, we're protected, you know, if one of us dies, even if both of us die. But not only that, we can actually build wealth through this. So you can like build savings, we can take money out of it.
Mhm.
Can you explain that concept of whole life insurance and cash value? Just, I mean, I know some of the listeners, they've heard this before, but some people would probably be like me, where it's
Mhm.
like, you actually didn't even know this was an option.
Yeah. And I think like I'm excited, Ramie, for you to get into this because I remember like listening on a call that we had just joined this awesome mastermind and you guys were just sharing again about because you care and you'll see that in Ramie. He really like wants you guys to get it and he really does care. And that's why we brought him on. But I just remember listening and sometimes you don't know what you don't know. And my family didn't talk about these things. I'm sure my family has some sort of thing in place, but I don't really even know. And just hearing like what is available and what this can do for your family. And we talk so much about legacy and leaving a legacy that outlasts you. And this is like a key piece of it. So go ahead and jump right into what Stephen just asked you.
Yeah, no, that's awesome. And really, if you think about that, it is very similar to the concept of renting a home versus owning a home, right? And there's a time and a place for everything. I don't know, Stephen, many people who started off and just were rainmakers, right, in the beginning of their financial life.
Yeah.
And so there's a time and a place for everything. And term insurance, just like renting a home, has a time and a place in people's lives. And so for me, the reality is that term is about how to get the most amount of coverage for the lowest cost possible so that, again, you're transferring that risk of financial loss away. But if you think about owning a home, what are the benefits of owning a home? And it's pretty plain. A lot of times, these things become more complex or they are easy to make them seem more complex than they need to be. The value of owning a home is that you build equity, right? It is not just dollars out of your financial life, that there is not a permanent benefit to your wealth, to your family. And so that's one of the values of home ownership is it's a great way for long-term wealth accumulation because you're making payments, you're paying down the mortgage. You have this big mortgage in the beginning and you're paying down that mortgage and your equity is going up and it's appreciating based on the market. And whole life is a lot that way. When you purchase a whole life insurance, if I have a $1 million death benefit, Stephen Chels, I literally have just guaranteed that no matter what else happens to me, no matter what happens to my business, my practice, my goals, if God forbid something happens to me, I have guaranteed, as long as I'm making those premium payments, that there's a $1 million income tax-free check that will pay to my estate for my family's future. So it is literally the only product where I can sign a contract and guarantee wealth is going to be transferred no matter what. But along the way, guess what? You are paying down the cost for the insurance. And as you're paying down the cost for the insurance, unlike term, you are building equity. And that is called cash value. So there is a portion of your contribution that no longer has to pay for cost of insurance that gets to just build and accumulate in cash, the same way you build equity in property. And that is exactly how whole life works. And so the value of that is it's not use it or lose it, right? With term, it's kind of like, okay, the only way this benefits me is if I die. And either die and my family uses it, or the premiums are gone for most part. There are other products out there that can have somewhat of a hybrid model, but that is the basic premise of it. Whole life is it not use it or lose it. It's, hey, I know whether I'm 95, 105, right? At some particular point in time, I'm no longer going to be here. So I'm going to guarantee wealth is transferred. But along the way, I want to build equity. I do not want to have this be a cost where I don't actually see a return on those dollars in terms of being able to have benefits while I'm alive. So whole life is really unique and cool because a lot of these concepts that got created, such as be your own banker, the idea of being able to save and use money at the same time, come from that concept that here is an environment where I can contribute, have a guaranteed benefit to my estate, but have equity that I can access along the way too. And when structured correctly, guys, one of the really cool things is the way that you can access that cash is in a very tax efficient way where you're not triggering a taxable reality for yourself. So entrepreneurs, people in general who understand it, they understand it because of the same reason. If I asked you guys, if you could choose, would you rather rent or own a home? Right? If you could choose, would you rather rent or own a home? And most people say, well, I'd rather own. It's the same thing. Hey, if I could choose, then I would rather own and build equity and be able to control that capital long term while having that guarantee and peace of mind.
That's so good. I feel like I'm going to give a couple of real life examples because we were kind of in the term insurance world.
Yeah.
And then we came over to the whole life insurance. We still got, I think, the term policy. So we actually kept both. But the term ends. That's what's called term. It ends. And what's the average age that term would end at? Like, is it 60?
So typically the longest term is about a 30-year term policy.
Okay.
And the older you get, the lower the amount of time an insurance company is willing to insure you. So basically, right, if you're in your 40s, even sometimes your 50s, but when you get closer to life expectancy, the less, the lower the probability that an insurance company is going to be willing to give you a 30-year term. So it's either typically a 30-year, 20-year, or 10-year. Insurance companies, obviously, most people don't know this, but mutual life insurance companies are the most profitable institutions in the world. These are institutions that have been around for over 100 years, some of them way longer. And when you look at how they make money, it's pretty incredible. But the point being that when you look at a term policy, term insurance generally is not designed to pay out, simply meaning it's not designed to be there when you're most likely to pass away.
Yeah.
Right? That is the idea.
Let's say I take out a term policy and it's 30 years, right? So it'll go till I'm 60 something. And then you can extend that, but it gets really expensive. But the probability of most people in that time frame dying and actually getting the benefit of that insurance, right? And that money not just kind of going towards, I guess just feeling good, right? Like the probability is very low of dying within that time frame for the majority of people. But with whole life, it's your entire life. So the probability of you dying within your entire life is pretty high, right? And so like, it's kind of like, okay, do you want to pay very little now, pay very little for this term thing, right? Or do you pay a little bit more and guarantee a death benefit, no matter what age you're at? And like, that's, I think for me, that plus the cash value, that was the thing that sold us on it, where we were like, wait, you're saying we could just pay some payments on this thing, just a little bit higher payments, and we could guarantee that like we're going to leave a financial legacy for the next generations. Like that's crazy to me. Like it's so cool. And then the cash value thing is like the cherry on top where it's like, wait, you're telling me I can access the money too? So it's like, so like an example of the cash value, I remember you telling me this was like, let's say you build up, you're paying into your payments. I guess it doesn't happen right away typically, but you're paying your payments right over time and you build up this cash value. Let's say you have like a couple $100,000 in there at some point. You can actually pull money from it and give yourself a loan, right? From the cash value, use it to buy real estate, do whatever. And actually like, correct me if I'm saying this wrong, Ramie, but like from what I understand, it's like you pull the money from the savings to use it. And now you start making money with it on real estate, but you're still basically making money over here. It's still growing over here as if it was there. Am I saying that right? Or am I saying that crazy?
Yeah. So you're not saying that crazy. And this is one of those things where I always say, term is always about cost and coverage. How can I get the most amount of coverage for the lowest cost? Permanent life insurance, whole life insurance is about structure and funding. So it's how was this policy structured? And then how am I funding it or contributing so that it actually accomplishes the objectives that we have? One of those things is for some people, the goal is to accumulate enough equity to be able to use that for other investments or opportunities. And depending on the insurance company and the interest they're paying, the dividends they're paying, oftentimes there are a lot of times where if I'm borrowing cash from my policy, using my policy as collateral, and I'm using that for other investments. Well, just like any other loan, there's an interest rate on that loan. However, most of the time, oftentimes the return, the interest and the dividends to the policy are such that the money that's actually not there is still eligible to earn the difference of what the insurance company is charging me and what they're crediting me. So it's this really cool thing where you're like, wait a minute, I have an opportunity where there's a potential that I can invest money in two different places, in my policy and somewhere else, and still earn interest on that same dollar that's over here, even though I actually technically don't have it in my policy anymore. And that is one of those concepts where you kind of have to hear that a couple times and see it. You're like, don't tell me, show me, like, where does it say this? And that's why it is really unique. It is one of the only places where you can do, and this is where that be your own banker came from. A bank has Stephen and Chelsey walk in, they deposit money. That bank on that same dollar can make more than one loan. So that dollar that you gave a bank $100, they only have to reserve a certain portion of that $100. They can loan that up to 3, 4, 5 times. It's called fractional reserve lending. So now that bank on one deposit can have 4 different opportunities to make money. And that's why banks are so big, so much larger buildings than anything else, right? They got some serious leverage on their side. Well, this is literally one of the only products where there's a shot at being able to do that. And you're right, Stephen, Chelsey, that's like the icing on the cake. It all has to be structured correctly, but there's nowhere else we can do that. If I have money in an IRA, if I have money in a brokerage account, if I have money in a CD, if I pull that money out, it's gone. It has it is one use case, right? When it's in there. The second I pull it out, if I've made money, I have to pay tax. And the opportunity cost now is whatever I was earning. So that's it. This is the only place where that's not the case. I have 3 to 4 different ways that one contribution into my policy is providing leverage to my estate and my plan to build wealth. And that's another really cool feature of permanent life insurance when done well.
That's amazing. I love how you're breaking that down and explaining it. So to Stephen and I every time I feel like I learn something new when you explain it, or it just re-edifies, like, I'm so glad we made this decision. But I know that there's probably a lot of skeptical people, or you've talked to people being in this industry for so long. What do you think some of those big misconceptions are, or why are people hesitant to
Especially
jump in?
whole life, right? Because whole life, I feel like that one triggers people. People are like, whole life, what? And I know Dave Ramsey would say that too, and that we kind of grew up hearing him, so he's like, term, no, don't do whole. It's like, oh, it's the worst, right? Why do you think people say that?
Yeah, it's actually something that was really curious to me. And I'll tell you guys a quick story about that. When I got started in my career in financial services, I got started as a life insurance agent. And I remember the guy who, and you guys know this person, who I went to mentor me in building wealth. I thought he was a real estate mogul. I thought this guy was just known for real estate. So I remember when I asked him to mentor me, and as he said yes, one of the requirements, which I didn't know until later, was he said, go get your life insurance license. And I was like, I'm not sure what you're asking me to do. He's like, it's pretty plain. I'm asking you to get your life insurance license. And I was just like, I'm not clear why. What does that have to do with real estate and investing? And he said, Ramie, you have to understand that to build wealth, you have to be great at managing risk, not avoiding risk. Isn't bad. Risk is a metric. But if you don't know how to manage risk, you will not know how to make and keep wealth. And the best risk managers are insurance companies, life insurance companies. That is why they're the most profitable. And so it was really interesting because even if you think about some of the best investors in the world, Warren Buffett, not that it's mutual life insurance, but there are some of their favorite companies that Mr. Buffett likes to invest in are life insurance companies or insurance companies in general. And banks have something called bank-owned life insurance. And it is because they have insurable interest that they want to protect. So I remember starting off on the insurance side, and the insurance agents, life insurance agents, are like, yes, life insurance is the best thing since sliced bread. Put all your money in life insurance. Wall Street is the devil. It's the casino. It's gambling when you go to Wall Street. And I kind of knew intuitively, guys, that that can't be accurate. And I remember then becoming a financial advisor, getting my securities license to actually be in the investment world and help clients manage portfolios. And I would talk to some of the incredible investment people I met, the wealth managers who manage hundreds of millions of dollars. And they were like, why do you have your insurance license still? Life insurance sucks. You don't need life insurance. Life insurance is not an investment. Life insurance is not an investment. That was the constant thing I would hear. And the reality was, if you approached it objectively and you said, well, what goals do people have in life? What are they really trying to accomplish and do? Most people want to build wealth so that they can actually live a life they feel called to live without the fear of running out of money and leave behind a legacy and have an impact. Either side of the extremes are not accurate. The reality is, as a matter of fact, there is no institution I know of that's successful that does not have a combination of both. Insurance products and investment products. The common myth, the misconceptions stem from these extreme opinions being the thing that gets headline, because that's what sells.
Yeah.
And yet that is not comprehensive wealth building. I'll tell you, one of the things that a lot of people will tell me, like, hey, but Mr. Ramsey says, buy term investment difference, life insurance is not an investment. He's right. Life insurance is not an investment. It's an asset. And there's a difference. And the problem is you can do the right thing in the wrong way and not get great results. Just like you can do the right thing at the wrong time and not get great results. Right? And so that has been part of the misconceptions about life insurance, is that, like, hey, just treat it like you would any other investment. It's an investment. Let's compare it to, we'll put the money here instead of here. And what I have seen 9 times out of 10, guys, is that life insurance, when structured correctly, done at the right time, is one of the most incredible catalysts to maximize someone's ability to build and keep wealth. And you can compare that to any plan without it. I will absolutely bet that when done correctly, there is no plan that can compare to a plan that actually incorporates whole life insurance as part of the wealth building strategy, that is not completely enhanced every single way, from growth to leverage on being able to use capital for other opportunities to tax advantages, both for you and the estate, for the kids and the people that you want to also, if you have charitable ambition and leave money behind, people you want to bless and leave money to, it's one of the most incredible tools that you can utilize. And so that's what I think one of the biggest misconceptions is, though, is just improper use. People who are super excited, and it's like anything else, right? When you get into something that you're passionate about, you're dangerous because you're at your place of most passion and highest level of ignorance. And that's a bad combination, especially in social media world, where anyone can just hop on, post a video, say stuff, and they're not really. Sometimes they're just well-intended, but they're not very educated. And I was guilty of that too, guys. Like, until I actually became a professional, like really comprehensive financial advisor, I didn't understand things that when I finally understood, and I was like, wow, like, that's incredible. I didn't even know that. So I think that's part of the problem.
As entrepreneurs and parents, convenience is key. But that doesn't mean you should have to sacrifice quality. For years, we nerded out on coffee, trying to get the highest quality, but that takes a lot of time, weighing the beans, getting the right grind, getting your water to the perfect temperature. And so when we had kids, we kind of shifted to the pod system, right? And it was a major downgrade. That was until we found X Bloom.
X Bloom works with the best roasters around the country, and their machine truly brings the specialty coffee shop experience to your home. If you love a good pour over, I highly recommend you check this out. You can elevate your coffee drinking experience while keeping up with your kids. If you're ready to transform your mornings, head to rainmakerfamily.com/deals to get started. That's rainmakerfamily.com/deals.
Yeah, the structure is so important of how it's set up, because you don't just go to any old person and say, hey, I heard this on a podcast, give me some life insurance, like give me whole, whatever you recommend, whole life, universal, just there's so many different kinds. And it's almost like I kind of compare it to taxes. Like, the tax code is so big that's really hard to know all of it, but there's definitely levels to the game when it comes to working with tax strategists, right? One person might say, hey, you're going to owe a bunch of money. And the next person goes, I could save you hundreds of thousands of dollars, right? Like, who you go to and how it's structured really matters, right? It's kind of can be make or break on how it's structured. Like, it really matters. Just like with taxes, like, very similar thing. And I think that's one of the reasons that whole life or life insurance even can get a bad rap. Like you said, like, it could just be the story someone had, the way it was structured. But I don't know, Ramie, do you have like a story of the impact you've seen of someone, having this type of product, investing in this type of thing and getting this type of thing set up?
Yeah, I mean, to just kind of in closing, second what you just said, Stephen, it's exactly that. It's like there in life, I've learned there are financial principles, and then there are financial strategies. And the principle is what you're adopting, and that's going to guide and create the framework that you use to view your financial life. So for instance, if you've adopted a principle of owning and establishing equity, building equity, right? That's a principle that says, hey, I would rather own than rent. Okay. And so there are different strategies and ways to execute on that. And then there are different products that you can integrate. So same thing's true with whole life insurance or any, mutual funds, index, or whatever it may be. But with whole life insurance, since that's the topic we're talking about, it all has to do with that very same thing. If you just said, if I walk into a bank and I say, hey, I believe in owning versus renting, can you sell me a home or can you sell me a mortgage? Well, there's not a universal mortgage. There's different products with different terms. And so it's going to depend on where I am, my income, what I could qualify for, all of those things. It's the same thing. If you just walk into an life insurance agent's office and you go, I believe in owning versus renting, I want whole life insurance. Well, there's not a universal whole life insurance product. There are different ways to structure it and different ways to approach that. So it's the same thing. But in all of the things we talk about and all of the concepts and everything, Stephen, Chelsey, like I remember, and I know we talked about this earlier, I remember the day that really defined my career where I made a decision to become a professional just as a life insurance agent. Because a lot of times, right, what can happen is if someone's had a bad experience or if there's a lot of misconceptions, then it's easy to start to try to mask what you do or to use different language just to kind of get a conversation going before you use the word whole life insurance, right? And I remember that I used to think that way, like I would describe it and people would be like, well, what do you offer? And back then when that was just all I did, I'd be like, I would try to think of cool ways to kind of explain the concept without saying whole life insurance. Until this specific day that happened to me, this must have been nine or 10 years ago, early in my career. I was probably like 2 years into my career, just as an insurance agent specifically. And I remember getting a call from a client and I didn't know who this number was. And it was a lady. And she gave me a call and she said, hey, is this Ramie Khalil? I was like, yes, this is. And she goes, okay. And I remember even just hearing her like breathe for a second. And she just literally was like, okay, you don't probably know me. And she told me her name. But you sold my husband life insurance. And I was like, okay. And she goes, and he passed away. He didn't make it home. He was out on a business trip. He flew in, literally was like driving home, had a heart attack.
Wow.
And I remember just like pulling over. She literally, before I could even say, I'm so sorry, she's like, I'm really not sure what to think right now. And I remember that this guy, he was a great guy, had 2 kids. So immediately I was thinking about the kids. Like it just was like a instinctual thing because I could even hear that noise in the background. And she's just like, hey, I don't know what to think right now. I just knew that, I have to figure this out. And I saw your name on this folder that to call you, something happened. And so I'm calling you. What do we do? And I remember just like in that moment, going through the process of like, okay, like this was the first time I ever actually had a client that I sold life insurance die. And so I didn't even really know how to respond. And I said, well, hey, just, I remember this guy, Mike, and it's like, let me get the information. And guys, like, I remember the drive to her home to deliver, basically the death benefit and to just be there for her to see how I could help. And I remember thinking about the first time I drove here to actually even sit down and have a conversation with this guy who had reached out about life insurance and just what I was thinking then in terms of, and what am I going to say? So I don't say whole life insurance or I don't say life insurance. I didn't know I was going to sell whole life at that time. And how like now going there and just completely in somewhat of a shock that this actually was happening and just feeling so kind of gut wrenched for the kids because I knew that there's no amount of money that can replace the value of a husband or the value of a dad. Like, there's not a check that we could write for that. You can't actually, one of the reasons life insurance has some of the tax treatment it does is because, technically speaking, there is no capital gain when there's a loss of life unless you can tell me what the value of that person's life is. And so the reality is I got there, man, sat down with her, and I could just see, she was basically just trying to fill in the conversation of like, this is what happened. I can't believe that, that happened. And, I'm dealing with this and we have to do this. And I could just see that she was just trying to like do problem solving in her head. And she's probably had people asking her these questions. And when it finally came time to just give her the check and let her know that, hey, I know there's a lot going on. I'm here to help in any way I can. But Mike and I spoke about this. He loved you. He loved these kids. He wanted to make sure that if anything happened, you guys could continue on with the life he wanted you guys to have. And honestly and naturally, because it's just human instinct, guys, like I could just see the financial weight come off of her, not because this was going to be everything they needed forever, right? It's one thing to be able to pay off all your debt, to put money in the bank, to not have to worry about taxes. It's another thing then to be able to still buy groceries, to fund college, to, pursue other things, right? So it's not as if it was like all the money she would ever need per se, but I could see that what it was all the money that she could need to buy time, to not be stressed, to not have debt, to be able to breathe and not feel like the weight of the world is just crashing down on her. Like, it was time for her, and I've kept in touch with this client. It was time for her to be able to just be there for the kids, because how am I going to be there for the kids, figure out the mortgage, the finances, reach out to the 401k department, the probate stuff. They didn't have a trust, which unfortunately they didn't at that time, which is a whole nother thing. But that was the day. I remember that day driving home just a few hours later. And I was like, man, like, at the end of the day, we all are people who have goals and dreams. We want to do the best we can for ourselves, for our families. And there's a lot of different ways to get there. But thank God that this happened for this family, to where all of this other stuff they have going on, like, we were able to do this together. And if like, it was indescribable in how much more important I took my profession and my craft and career, realizing what I was really doing for people and what we were really providing. Life insurance is it is the only redemptive product that exists. It is the only thing that guarantees that if I am no longer here to finish out the goals I have for building my business, for continuing to grow my career, that the economic value that I represent to my family can be redeemed. Nothing else will do that. No business will do that. No piece of property will do that. No 401k, IRA, none of that stuff will do that. That is something that in my heart that I always think about and hold, is that, like, you don't know the future. You don't know that we're going to be able to finish doing these different things that we want to do in the investment world. And, I'm a rare breed, not because I'm special, but because I actually operate on both sides of the spectrum, the investment world and the insurance world. And so I love the market. I love investing. I want people to grow their wealth in those things. I would never tell someone they're going to replace those things with whole life insurance. It has a very specific use case, and it is a catalyst to actually enhance what you're doing there. But guys, let me tell you that your ability to become a better investor, your ability to have more confidence stepping on the gas to go out there and accomplish your goals and dreams, when you know you're building on a strong foundation, is indescribable. I've seen how much more productive my clients who have put protection in place are, who know that no matter what else happens, I've already guaranteed legacy is going to be there for my kids. Wealth is going to be there for my kids. Like, these are individuals whose productivity are so much higher, in my opinion. And I get it. I'm naturally biased around that, but I do also see the truth of it and the fruit of it. And so I honestly tell people that, like, hey, you get educated, because one of the things is that, like, there's there's an interesting reality that anything that's worth having, the bar is set higher, the standards are higher. You don't have to pass a health test to open up a Roth IRA. You don't have to pass a health test to open up a 401k. You don't have to pass a health test to invest in the stock markets. But when it comes to insurance, there's a requirement and a standard that is higher because of the guarantees that are being provided permanently and the work that's being done the second you sign on that contract. You're actually guaranteeing that poverty is effectively broken off in many ways from the next in line generation.
Wow.
And so there's nothing we could do in a moment where that is something that happens that quickly. So that was something that impacted me. And I've had other clients pass away after that. You know, there's nothing like that first time where you realize the importance of what you're helping people do.
Mm-hmm.
Yeah.
So
That's
good.
powerful. I know like some of our listeners might be saying, hey, I mean, maybe it's too late. You know, I know like Steve and Chelsey, you're young. Like you got, you know, I can't get insurance. I'm too old. Like, but I know there's a lot of products that you work with, a lot of baby boomers who have some sort of investment and they're like using it in strategic ways. Can you talk just a little bit about that? We're going to go more into that definitely in our, the training that we did, for our community, but, talk a little bit about that. Like someone who's kind of thinking maybe I'm too late.
Yeah, no, ironically, and that's the funny thing is because, you know, the most of our clients at our firm are folks who are baby boomers. Naturally, a lot of the work we specialized in doing was retirement income planning and risk management, which just naturally meant the audience that we were really serving as a firm were folks who were either like 5 years away from retirement or already in retirement. And 80% of the policies I've put in force that I've helped put in force for clients are with folks who are over the age of 60. And so it is a misconception that if I'm already older, then this no longer matters for me. Just like it's a misconception that, okay, if I no longer have kids at home and my mortgage is paid off, I have no use case for life insurance. That's absolutely not true. And how it shows up in advanced estate planning, income planning, distribution planning. But the fact of the matter is age is not the only requirement. And so the thing that is the most important is to evaluate it, is to objectively be able to say, what are the goals I'm trying to accomplish? And then what does the plan look like today based on what I'm doing? And if I was to actually evaluate and utilize this, what would the after picture look like? Anyone can have an opinion, but when you can objectively see like, hey, let's actually see the analysis. Like here's the before picture. Here's what our life looks like without life insurance. And then here's the after picture. Do we actually see metrics that improve across the board that just are self-evident? And so that's what I always encourage. But yeah, there are definitely different products, Chelsey, Stephen, that you can utilize and evaluate when you are in your 60s and 70s for life insurance, whole life insurance.
Wow. That's awesome. I know like people are definitely listening to this, wanting to learn more.
Yeah.
We did like a more in-depth training in our mastermind. We're actually going to release that publicly because again, this has changed so much of our like way we see wealth building, even our financial strategy, how we're planning to leave financial legacy and really guaranteeing that. Right. So if you want more information, we put together a website. It's rainmakerfamily.com/legacy. So rainmakerfamily.com/legacy. We'll put a replay of that more in-depth training. But Ramie, for anyone kind of just interested in taking, you know, a little bit deeper look at this, like what does that look like, you know, connecting with you guys?
Yeah. So one of the things, it's exactly what I just mentioned. One of the things that I love doing is actually just being able to sit down with someone, find out more about their story in life, where they are, and really what they're looking to accomplish. And so what we always do is we always have folks schedule a no obligation consultation with us, myself and my team of licensed professionals, where we can get to know you better and find out like, hey, tell us more about your story and what you're looking to accomplish for yourself and your family. And let's do the analysis. Let's show you different strategies and different ways to utilize permanent life insurance. And let's look at the numbers. Let's look at the cost comparison and the before and after picture. I think when you can show people that objectively, it will speak for themselves. One of the things I heard a long time ago, I don't know who said it, but they said, here's the reality. The truth is like a lion. If you set it free, it'll defend itself. And the same thing's true in finance and investing is that like, no one presents a bad deal on purpose, right? They don't let the bad presenters present, something I used to hear. They only let the good presenters present. And yet, at the end of the day, I think that it's very easy for someone to see the reality of the impact that permanent life insurance can have if they can objectively just take a look at their life today financially and do the analysis to see what would it look like if we were to integrate this, and does that make financial sense for us? So that is the goal of that consultation, is just to actually be able to get to know you, find out more, see if we even think it does make sense based on several other factors, and then show you that analysis with you being able to take that, look at that, and then make a decision on whether or not that's something you want to implement for you and your family.
That's awesome.
So good. Thank you so much, Ramie, for being on and sharing, breaking down some of that. If you are interested at all, if you have any hesitations, just go to that link, rainmakerfamily.com/legacy. Like Ramie said, this is a no pressure call. They just want to see, like, can they help? Is there something that maybe you haven't thought about, some kind of strategy that would work for you and your family right now? So thank you so much for being on. Thank you for tuning in to another episode of the Rainmaker Family Show. Thank you for listening to another episode of the Rainmaker Family Show. If you're not a part of our mastermind yet, I want to say I think you're missing out. Our heart here at Rainmakers is to create total abundance for you. That's why we're offering a free one-on-one family freedom design session for you, our faithful listener.
Yeah, if you want to hop on a call with our team, see if it's a good fit to build a business that creates time freedom for you, financial abundance, and helps you leave that thriving family legacy. That's what we're all about in our mastermind. You can grab a time on our team's calendar at rainmakerfamily.com/mastermind. Again, that's rainmakerfamily.com/mastermind.